Traders at UBA expect the market to remain cautious with a tilt to bearish sentiment. Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me now for a weekly wrap of the fixed income and FX market here in Lagos. Chuka, thank you for joining us today. Thank you, sir. Good afternoon. Let's start with you bringing us up to speed on today's trading action, starting with the money market.
Yeah, thank you. Today has been really quiet, typical of Friday. The system liquidity is short, over 150 billion. Liquidity has thinned out due to a couple of reasons, CRL debit, as well as the settlement yesterday for the NTB auction. So the system has been pretty tight.
So could you tell us where the 1 year note is at the market, at the treasuries?
Can you repeat that again, please?
The 1 year note.
All right. Okay. So the auction came out 12.98 from 12.55 at the last auction. That is the 1 year.
Yeah.
Post auction is currently trading around 11.1, 11.2%. This is as a result of people who didn't win at the auction, entering the market to fill in demand, and so that has, has depressed the yield, and probably it will depress further if liquidity persists.
Right. That was what I was going for the post-auction rates of the 1 year bill. Talk to us about. I wanted to quickly get before continue your thoughts on the inflation numbers that just came out for the month of August at 25.8%. What are your thoughts? How is the market, if any, if at all, reacting to that?
The results came out about less than 2 hours ago. Like you rightly mentioned, 25.8% from 24.04%. This has already been given. Markets, if anything, has actually priced it in that the inflation figures will continue to rise. All the parameters, all the indices that made the inflation figure rise in the previous month is still there. The high cost of food, increments in high cost of petroleum products, as well as insecurity, and then a general economy downturn. So all these parameters are still there. Improvement hasn't been much, and so we did not expect anything less in terms of movement in inflation figures.
Right. So let's get back to liquidity. Obviously thinning out at the market. Going into the new week, what are you hearing in terms of what liquidity levels could be like? Do you feel like that could improve?
For now, I don't see any improvement except something miraculously happens, because presently we have system in deficit of, like I said earlier, 150 billion. Though going towards the end of the month, we see improvement in liquidity, because there will be coupon payments, well over 300 billion will come into the market, as well as a FAC, but that is towards the end of the month. But between now and next week, we expect to see very tight system.
Let's hear your. Let's also get an update from the FX markets. I see that the Naira may have weakened. Could you confirm that?
Okay, the INE is currently trading around 780. There hasn't been much improvement in the rate. It's been fluctuating between 775 to 780 levels, and so this will continue as long as the demand, like I always say, outweighs supply. We'll continue to see depreciation here and there on the FX market.
Now, I know that, let's talk about the markets on general terms for investors, especially institutional investors who invest in government securities, especially, for instance, the pension fund guys. How would you say this year has been for them investing at the fixed income market in terms of return? I know that in terms of options, there isn't a plethora of options, obviously, and of course, with the return rate still, as negative, etc. How would you describe their investing journey so far this year?
Well, this year generally has been up and down for everybody. Apart from the investors, even for the general economy. I mean, mainly because of this was an election year. Things started on a bit slow, and then things are beginning to kickstart. Now, for the pension and for investors as regard the fixed income security market, I think that fixed income market has really not done badly. Rate has fluctuated between single digits to double digits, and so every investor every investor who has invested in fixed income market will tell you that it's been mixed reaction here and there. Some got their finger burnt, some smiled to the bank. So presently, the yields are looking very attractive, especially on the bond side. For example, the longer end, which is 2053, printed at 16.25 from 15.85. And so any investor who had bought into that bond at the last auction definitely will smile to the bank before the end of the year, because this bond, yield will depress towards the end of the year, and then people can take profit.
All right, I guess we'll see how that plays out. Thank you so much for talking to us, Chuka, and of course, have a great weekend. That was Chuka Nwachukwu, Head ALM and Balance Sheet Management at UBA.